The YouTube is kicked off. It should show on my screen in a few seconds. Yep, hope you're having a good week, Marius. Okay, we have got 10 seconds left and then we'll kick off. Good morning, everybody. Welcome to the month of December. It's 8 a.m. here for the breakfast hour. It's Friday the 1st of December. And without further ado, let's get the disclaimers out of the way. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay. That is the state of play in the heat maps before we go through the slideshow. So yeah, a couple of things to note before we disappear off this screen. Firstly, on ES, this is the unfiltered ES. So you've got the MBO, you've got two resting sell icebergs up above. They are likely to be targets as and when there's an opportunity to go long. Maybe there was one just about there, or into this liquidity here was probably a better entry. But there are some potentially good targets up above. Meanwhile, over in NQ, this is the filtered heat map, and we've zoomed out, and we're going to talk about this one in terms of being wrong occasionally, because we very rarely talk about being wrong and you know, sort of just taking a stops. I think we need to talk about that a little bit more because that is a lot of this game. So that's the filtered heat map in NQ, the thing to note there, and we're going to talk about all of these liquidity areas and how useful or not that they could have been in this big push down to the overnight low, which is at 15,919-ish. But the big thing to note is that there is a liquidity level that they put in round about the London Open, and that's at 15,915. It's a decent size, 61, and that has stayed pretty much constant. So that is likely to be a target or support at some stage, because we're getting quite close to it and we haven't used it as support as yet. Anyway, that was just a quick view on where we're at. So let us, without further ado as well, move on to the slideshow. And again, feel free in YouTube or Discord to ask any questions, comments, anything like that. They're always welcome. Okay, let's have a first look at the major news. So I've only got the extremely important items today. Got the Canadian one. Well, that's important for the Canadians. The unemployment rate for them at 8:30. Doubt whether we'll see a huge amount of volatility in the ES and NQ. Then, but we have at 10 a.m. the main news of the day, which is the ISM PMI forecast at 47.6, and at 11 we had Fed Powell himself speaking. So both of those should give rise to significant volatility during the RTH session. And let's quickly flick back and see these two resting sell icebergs. We're getting closer. So if we zoom out and we see this tag into this liquidity, and you can see what was available in terms of points, you know, you're probably the best realistic entry. I mean, you may have got in at 65.25, but more realistically 65.50. So we're talking about 4 points as the target, and really you want your multiple R's. So anything less than 1R, yeah, I'm not trading. It's up to you whether you trade, but it's not something that I want to do. Okay, back to the slideshow. Okay, so interestingly in ES, which is actually stronger than NQ yesterday, we're balancing in this zone here, just around a major previous swing high. in late August, early September. So if as and when we get some news or Fed Powell speaking to say that the interest rates are going to go to zero or whatever he might say, we might take that out after we bounce there. So basic price action theory that once you're in an up trend, I suppose we can call this one, and we just balance here at the highs, it's likely that that will continue. This is like a pause for breath where they're trapping as many sellers as they can before they continue higher. So the fact that we haven't really taken out this high over here, the early September high yet, but that, again, that is just pure price action. That's nothing else. NQ, it was a little bit weaker yesterday. That's that red bar there. And yeah, we will, when we get to the TPOs, have a look at that. So we did go and tag that previous high, which is the one from August, and we have backed off, and essentially we're at last month's close. So it's saying that nothing has happened, or actually that could be the November close, which is just yesterday's close. So I'll shut up on that point. We'll have a look in due course. Okay, looking at the 10-minute, so you've got yesterday's session, which was ETH session, which was basically an up with a dip, and then quite a big V down in the RTH and bounce back. That's ES. And so far we've been hovering around about settlement. We're at the low of today's overnight range, but we are nowhere near yesterday's mid. So it is quite bullish in ES. NQ, different story. We did have a bounce, an afternoon bounce off the lows in NQ and RTH, but since then we have not really spent much time above settlement or yesterday's mid. So we had a nice rally at the London Open, but since then we've had an inverse V back down again. So that's where that is. I think there's one last slide. Yep, just the ranges. The point to note here was that Asia was really quite narrow, and yeah, even NQ in the European session so far has been quite good. This is the last 10 days of trading days average. So yeah, ES is at its average, which is not terribly large for Europe, and ETH. Yeah, about 3/4 of the way through on both of them. So yeah, and the relative volume is above the average for the last 10 days, but nothing really overly special about any of that. So let's ditch that and move back over here. All right, so yeah, the only other things we've got to recap are the TPO. So I've dragged it over here, and I've got this bar split out. So if I just zoom out, you can just see that we've been in a wide range, which is now depicted by this top there and the bottom there, and we're just traversing the range from both sides. So if we actually merge these and begin there, and we end the merge of the profile, in other words, we're creating a composite, you can see there is a beautiful bell curve. And again today in ETH, what do? We tagged the ledge, the LVN top of that merged bell curve, and then we've gone back to the most traded volume within this merged composite bell curve. So that's essentially nothing overly surprising in that. That's basic auction theory. So we've had basic price action theory, now we've had basic auction theory. So that's why you draw a profile, a composite across a few different days when you're just balancing, just to help you see where the extremes of that value are. You don't focus too heavily on this 70% is your perfect distribution curves. I don't concur with any of that. So I'm looking for where value is obvious to my eyes or anybody else's eyes. That's how I'm using those. NQ, let's just have a look at this one. You can see it's a little bit weaker. So we're really at the bottom of this range. Now, if I don't draw that bell curve, but you can, well, I may as well do. So if we draw it again from here down to, I'll do it before, yeah, I better include yesterday's, hold on, did not do it. Let's draw it from here actually. Let's reset everything and do it again. So we'll do it from this one, merge profile begin, and this one can be the merge profile end. And you can see it's a very large bell curve with a slightly hollow stomach in the middle, and yeah, we're right in the middle of that very, very large range. So the fact that we're just bouncing around the middle, it means that what has happened in ETH in NASDAQ is a set of games. That is quite often the case. All they do is play the best games they can to take the most money they can off retail traders who are their fodder in ETH. So we've got to play the game cleverly so that you don't become the fodder and that you can recognize some of the games that they do play and try and join their coattails. That's essentially what you want to do in ETH. See the types of games they play and be ready for them. Okay, so let's have a look. Okay, just checking on questions and making sure we've got a few people here in both Discord and YouTube. Hello, Ron. No, I haven't said hello to you before. And Dan, you're here as well. Good to see you, Dan. All right. Okay. One thing I've got on my groupie tabs today is a blank page. Why have I got a blank page? It's because we're going to write down some things, and we're going to talk about the focus. So the focus really is identifying, missing out, where we might be wrong, right? So we're going to use the NQ heat map in that sense, and we're going to look at the trader map filtered liquidity, or the unchanged orders, and we're going to zoom in and out over the session from basically the German Open, which is say 10 to 2, 1:50 a.m., and see where we might have been wrong. So rather than what we often do, which is look at being right, we're going to look at where we might be wrong or where it might have fooled us, because one of the things I always have to stress is there is no magic in any of this casino game. It is a question of probabilities, and a lot of the game, where it is a game of probabilities, is accepting where you're wrong and getting the hell out without taking a big loss, right? Where you are right, yes, try and stay in as long as you possibly can. You know that old adage. But where you're wrong, don't break your account, because some of these games in ETH can be absolutely vicious, and we can have a look at them here. Let's have a look at this one, for example. So you've got a very, very clear liquidity here at 15,945. You might, regardless of what happened, one of the suppositions here is that is both a target and a support zone, right? So if we zoom right into what actually did happen, you can see that I don't think they actually interacted with that. I think it got moved just beforehand, and maybe they put some of their orders down there, but it did not act as support. So if you had been long, and you had a fairly tight stop here, which was linked to this liquidity, so it was a few points below that liquidity, if that. Once that had been taken out, and so that the supporting liquidity had disappeared, and you started seeing heavy liquidity above, maybe your stop was around about here, but you're clearly wrong at that point if you're using this as supporting liquidity to take a nice bounce and to go on. There were lots of targets up above that you could have been targeting. So there is absolutely nothing wrong with being wrong, because we're going to do that an awful lot in our trading. But it's one of the things I really don't think I've talked about enough in these webinars, about being wrong and taking good losses and moving on. So you get in here because it's come down. If we go back again and just look at, we just zoom out, so it is quite a big move down. So from this high here, just about just before 7 a.m., just before the breakfast session, it's come down a long way, or relatively long way. So it's come down essentially from about 15,967 all the way down to 15.945. So you might well be entitled to think that we could have had a half decent bounce there, and we've got this liquidity support. So all I'm saying there is it's a good idea to recognize that this can give you a clear out as well, and that out doesn't necessarily have to mean you've added dollars to your risk capital. You have lost a small amount of risk capital, and that is again a very, very good thing. In this webinar, we talk about probabilities. We talk about never being able to predict the future and not kidding ourselves that we can predict the future. And we also talk about taking equal dollar-sized bets, provided you've done the kind of work and you developed the system, whether it's manual or in my case automated. So I'm always taking the same dollar value risk on each and every trade. And if I'm doing that, where's our blank page? If I'm doing that, let's say that today my risk might be $300, right? And I get out at minus 200. That's a great result. Minus 300, good result, right? Minus 325 or 325 because the stop has been slipped through, just because the NQ can be really thin, and we'll go back and we'll have a look at NQ in Europe, and we'll see that the action there was a lot better, a lot cleaner, and a lot more interesting, and decent sized ranges than there were in ES. So minus 325, that's a good result. If you let that slip though, and you take something like a minus 500 loss or a minus 600, etc., you're not playing a systematic game per a systematic trading plan. So once you get into that realm, it's no longer a business. It is a pure game of roulette, and there is only one thing that is going to happen in the long run. It's regardless of me talking about anything to do with some of the stuff that we observe on these heat maps day after day after day, you're going to end up losing all your capital. That is the harsh reality of it, and that's one of the things that I did want to say for a change. So take your losses, make sure that they relate to your 1R. And that they are not much more, if anything, and it's only due to a technical reason which is ordinarily beyond your control, like slippage, and move on. Okay, right, let's have a look, a tiddly bit of live commentary here, because it's always interesting with these cell resting icebergs. I'm flitting in between technique, analysis, probability theory, etc., and doing some live commentary, but that's essentially what we do on this webinar. We do a lot of different things. So what are we looking at here? So I wasn't looking at this closely enough when we started this webinar, but if you do look at it now and you see that the delta there is really red. I'm having a look on my stuff in Sierra. Yeah, it is really quite red, and the other thing that you can also do is that you can also drag this volume profile out quite wide, so that even though that there's volume of 252, you've got a nice little bell curve. What have I done with my pen? Let's have a look. So you've got a little bell curve there, all right? And a bell curve suggests a range. So that if you're at this bottom of this range, it's likely to get back to the top of the range. Regardless of whether this is just distribution and they're going to take it down much lower to say 4, 5, 60 or wherever they're doing, that there is some decent theory behind targeting these two resting cell icebergs as targets. Okay. And if we delved into this delta and we had a number, and we could always do that. Maybe we should, because we rarely do that. And I've mentioned that when I'm looking at this sort of stuff in Sierra, I'm looking at short-term volume numbers. So I am looking at exactly the same as that. I often scrub it in Sierra. When I say scrub it, I just erase it, so that I'm looking at the volume, the current traded volume right this second. Once we've hit a low, I can remember what it was. So I just want to see what is next hitting the low, etc. Okay, so let's have a look. Let's insert a column here just temporarily. We'll ditch it in a second, and we'll turn this one into numbers just so we see what the delta was, just to give us an idea on these turns of what the kind of delta is. So if we go bars and numbers, and then we just actually go numbers, so we can see there's a potential of 176 sellers trapped there, and you can see all of these are minus 135, minus 246, minus 13928, etc. So there's a decent red tail that was setting itself up, and you hit into liquidity. So that is what I'd call in ES, in this kind of session, which has been really quite a grindy session, an A1 setup. So if we were going to draw it, we would be taking a stop. Say we'd got in at I think it was the 46550 mark that I think was a feasible entry, right? You're not trying to take more than a 2-point stop here. So you've got that, which is 2 points. Apologies for drawing with my mouse, not the best at it. And you're targeting 69.50, so you're targeting 4 points. So you've got 2R. And when you've got an A1 entry, which that really was in terms of the delta tail and clashing with liquidity, and you've got some MBO stops there, 198 and 57, you've got a 2R trade there. So would I take that every single time if I wasn't talking on this webinar? And again, I am not trading right now. I will not be trading for this hour because I am talking and trying to give you some information, entertainment, whatever it is that I do. So that is a 2R trade. It's based on at least 3 things that we've talked about. We've talked about the bell curve of the range, and I might have to go back in time to see what it was like. If we go back to when this clashed there. Yeah, sometimes you have to see the bell curve in advance before it happens. So you're seeing a thin profile there below a ledge, right? So this here is clearly a ledge, okay? And yeah, there is a theory on supply and demand that that it will return back to the ledge. I won't go through the umpteen different variations of supply and demand courses they're out there in the world, on the web, on YouTube, wherever. But one of the theories is that price will retrace back to its ledge, which is this thick bit of profile, before it then continues down, etc. So with that, you almost have to see this bell curve, which does form before it's actually happened again. So even though we cannot predict the future, we have to have a lot of creativity and imagination in how we see that price action, so that we can see the shape of what might happen if we do get a retracement back to our target, and our targets here are 4569.50 and 4570.25. So there is a difference, albeit somewhat subtle, between being able to imagine what the next bell curve or trading range will look like and predicting the future. But there is a distinction. When you are being creative in your mind of what that trading range or the retracement may look like, you're accepting that it may happen, and you're also accepting that it might not happen, that we might just get a continuation down, and we've had lots of those on this run down. Okay, but what increases the probability that it might happen is this double sell resting iceberg. Why does that increase the likelihood that it will happen? Because they're advertising the fact that they'd like to do more business at these 2 prices, and they've also shoved in some liquidity here right at 4570, and they've kept it there since this moved down. You can see when this liquidity was placed, and it was increased. And that does, in my back testing, increase the probability that we will have that retrace back up to there. And when we get to within 1 tick of that, I'm always happy with that. The other thing that we have to learn time and time again in this game is not to get greedy. Once you get to within 1 or 2 ticks of your target for something like a 4-point target, and then you let it fall away, the risk to reward is changing dramatically in the last part of your trade. The risk to reward becomes, it is not a static beast if you're actually calculating it from moment to moment to moment. So it's just whether you want to do that is something for you in your trading business, but a lot of people do look at the live risk to reward throughout the course of their trade. And again, you can do that through some form of automation, or you can do it manually in your head with, if you're good with numbers. Let me just ditch all of that. Okay. Right, okay, so whilst it's trying to grind its way back to this zone here of these two resting icebergs, let's just zoom out again on the Tradermap Pro. And again, I want to contrast this between the unfiltered heat map, which does have the MBOs, which are useful, but they have these dreadful algo bands up above and below, which make reading this heat map very, very hard in NQ. And that's why I don't spend that much of this hour demonstrating what is in the NQ heat map at the moment. Maybe it's all going to change when we roll over to the March futures, which is only a couple of weeks away now. For those of you that are new to futures, the futures product for the ES and NQ is a 3-month product. So every 3 months we roll to the next futures contract. So we're currently in the December one, and in mid-December we will roll to the March one, and that will be H24. Okay, so we're talking about being wrong and being right. If you just have a look at that there, right, there is some value there, but I do feel that with this filtered heat map, there is a lot more value if you spend your time trying to clarify where that liquidity is, right, and where it came in. So we're just zooming back in time. We're doing some hindsight stuff at the going back to the London Open here, right? And we're noticing in hindsight, and it can still be good in hindsight because it's giving us things to note down in our journal that might crop up again and again and again. This is assuming that we're going to touch the London Open more than once in our lives, okay? And the thing to note here is what happens with this liquidity. So we'll draw this one here, and meanwhile ES, as you can see, has taken out the first iceberg target and is about to tag the second one. So I repeat this time and time again, I know, but that's because it is a setup which is customized or unique to the or the clarity of it is unique to the MBO add-on that Bookmap have. So it's one of those things that is relatively easy to see if you've got it. You have a clash with that liquidity after a big move. You've got a delta tail, and you've got clear pink line targets up above, which are those resting sell icebergs, right? But meanwhile, over in NQ, so what we're looking at here is that as we smash through this liquidity at 15,973 and we take this out, this new liquidity up above at 15,987 comes in quite quickly. So the time difference is 331 to 333 or 334, 2 to 2.5 minutes, right? So if you have this zoomed in, right, and you had it all zoomed in like that, or I'll just get rid of that drawing, you're not going to see it, right? And this is my whole point about using the filtered Tradermap Pro to the best or to the most efficient usage of it to help you make the most money or the most R's, and that's the R multiples on your risk capital that you possibly can. So if you just have this zoomed right in, and a lot of people do, they have these they have the delta bubbles or the volume bubbles, and they have it zoomed into the minute or stuff, you're not going to have noticed that. You just won't have seen it, right? And this is a great filtered heat map. But if you have got it zoomed out, and I recommend, not sorry, I don't recommend anything. What I am using is a default time slice of 60 minutes on this, right? I won't click it now in case it takes us all the way forward. But when you see that, right, and then you see this kind of action, and one of the things I want to show you again is a violent vertical move, right? So you've got a couple of factors here. You've got this liquidity that's developing up above that you've seen by zooming in and out regularly, and you've also got these vertical move downs, which is often retraced, right? Where you've got a nice target up above and you've got quite bullish action because we've just smashed through liquidity and kept going, that gives us a likelihood that the liquidity up above, and apologies if that was quite loud in my microphone for those of you on YouTube, that was just the Canadian employment release, which for due diligence or just for information's sake has come in at 24.9 thousand against a forecast of 14,000. That's the employment change, so I'm guessing it's net jobs. Anyway, it has not tanked the market, nor do we think it would. We didn't think it would retouch the volatility in the US markets. But where was I? I was just talking about, this liquidity. This then becomes a target because the action was bullish. You have that vertical slip down, which is likely to be reclaimed, especially if the action is bullish. And so if you've got that slip down and you've got this target up above, that's when it's best used as a target, right? And you can also accept in your mind that it's a double-headed beast, and that once we get up there or get very close to there, it may well act as resistance. But what you do not know is the future. So you do not know, until we get there, that it was a perfectly valid target, and you do not know until we have come off it that it actually acted as resistance. And on this occasion, it did not. At least I don't think it did. We're about to find out because I'm now going to remember. Actually, yeah, I had my worst trade of the day was taking a short. It was like a reverse spring in ES when it was just grinding up. I took my 1 hour loss, but it was just a dumb trade. It was valid but dumb. And I just find the action in NQ a lot clearer, and you have more of an opportunity of multiple hours, although on this occasion ES did grind upwards as it currently has just now as well. So you can see we're right at that 470.25. So if you'd had a target one tick below 4570, I'm pretty sure you would have been filled. Okay, and we're now just going through this liquidity here, and we're just again replaying what happened and to see what could have been useful. So the first time you've got this liquidity here, which is the one at 15,996, you could have said that's a clear resistance, right? And you shorted there. And my point here is that we've got to recognize that we're wrong here. And one of the most important things that I can say about NQ is that if you're wrong, it is often, very often, wise to just get out and take your small loss or your max 1 hour loss and wait for the next opportunity because it's likely to be just around the corner. The symbol gives you many opportunities. So maybe that was your first sell for whatever reason, and I'm doing hindsight now, so I'm not having a look at why. Or maybe you had a really wide stop because you'd seen all three of these liquidities and you put it up there because you could magically predict the future. So I'm just saying that it could have been wrong and this could have been right? And again, how you used it, you do not know until you have used it, which was wrong. It might have turned around right just here, and you could have had a limit order up here, and you would never have been filled before the big down move. So it's just something that I wanted to point out in this session, that when we're dealing with resting liquidity, it is a beast with two heads. And I think there's a question in YouTube, so I should stop. Hey John, yeah, good to see you. Yeah, you and I haven't spoken for a while. Great discussion on Delta column. Oh yeah, it's just a comment. Okay, cool. Yeah, I thought you had a question there, John, but no problems. Right, no, I think the delta column is useful. The reason why I do not have the numbers there and I do not have the CVP, the volume profile, really wide, in other words, I get rid of that one and I shrink or narrow the width of that one pretty much as possible, is because this is not my only platform. So I'm executing in Sierra. I'm totally honest about this, and that I can see some very similar immediate auction type stuff and a visual time and sales there, so I don't need to double up. I find these delta tails in terms of the visual aspects to be incredibly useful in Bookmap, probably more useful than any delta tail that I've got in Sierra, and especially so because I can zoom in and out and I can drag backwards and forwards. As long as I don't try and clear this column, there's a reset there. If you see, I'll just repeat what I just did. I'm not going to reset it, but if you go in, right click it, and you go reset, and you say reset now, or you reset on double click, or you configure resets, you can reset that. But that is not how I use that one in Bookmap. I use this as static so that I can always go in and review how each of these swing points have been, right? Whereas in Sierra, I will constantly reset or clear what I'm seeing by way of numbers in this column here. All right, so I'm using the two in tandem, and the fact that I have this ability just to go back to the very last swing point and look at that delta tail is very useful to me, and that's why I never reset it in Bookmap. It's just a personal choice about the process that I have to look at these swing points. All right. Okay, and as quite a few of you know, I am a huge fan of keyboard shortcuts. And if you go into the Discord in Bookmap of share your desk setups, you'll see that I've got a couple of weird keyboards. So I have quite a few easy to access keyboard shortcuts, that are accessible to me. So like I can use a shortcut with currently my left little finger to change tabs in Groupie, so I can go between, and this is something I do outside of these webinars, that I will literally go between the MBO unfiltered heat map and the filtered heat map. I think this heat map in ES is useful. It's not as useful as the one in NQ, where the unfiltered heat map is nowhere near as good as the filtered heat map in NQ, but it's still very useful in ES on a higher time frame basis. So if we were going back to that 60 minutes, that it's quite useful, and it's also useful if you zoom out vertically, so that you can see where you might get this resistance. It's quite a large chunk that they have to eat through if they're going to keep on going up and get back up to settlement. So it's likely that some of this will form resistance and then it might come down a little bit. But we shall see, because we've got these resting icebergs that they're trying to fill, and we're noting the values that they've got and the delta tail. Maybe we'll get a lovely green tail before it does, or if it does have any further move down. Again, we do not know the future. We do not know if it will go down, or whether we will just have an uptrend day and will never come down again today. All right, a quick time check, because I've been babbling on virtually non-stop, not taking a breath, and it is 8:38. So we've had the news, the Canadian employment or unemployment. Right, what else have I got? Okay, we've done the TPOs. We'll leave those alone so we can refer back to them. Okay, what have I got? Right, I have got the stock heat map for yesterday open for a particular reason today. I've pulled this up previously. I haven't normally pulled it up as big as this, but there is a reason why I've pulled it up to be big today. It's to show the relative strength and weakness. So if you look at the top left, which is the tech sector, and the tech darlings, and the darlings are also in the right-hand sector as well. Nvidia, Google, Facebook, Netflix. You can see some big, and AMD obviously, you can see some big down days in yesterday's. Nvidia, which has been the darling of the year, minus 2.85%. That is weakness, right? What has really been driving the market up is the finance sector, and you can see, that was still relatively green yesterday, hence why ES seems to have had a much stronger bounce in its afternoon RTH session than NQ did. I mean, it's the strength of this finance sector. And the other thing that we've got is, something that we don't often look at on the the daily view on some of these symbols. Why do I have a trading view? I've got the most basic plan. It's called, I've forgotten what it's called. It's the cheapest possible plan in trading view that doesn't have ads. I've got it so I can check through a bunch of symbols. I've got live data on futures because I am also a customer of Interactive Brokers. So if you are a customer of Interactive Brokers, you get live futures data in TradingView without having to subscribe to futures. That's the current state of play anyway, as long as you link your Interactive Brokers account every week. So you actually have to connect the two every week. But what are we doing here? We're looking in TNX, essentially at the percentage rate, the interest rate, and how it has retraced back down from 5% to 4.25%. That's a big drop, right? That is a lot of the reason why ES has been so strong. And one of the things that I do recommend, sorry, I can't use the word recommend. One of the things that I do look at is other symbols that can be driving everything. So if we type in XLF, like we were just talking about, which is the finance sector, and we have a look at this, so you can see how strong that that has been driving the market for the last week or two. So you can see how ridiculously strong that was, and it's just keeping an eye on these things. So so what I often talk about, and I'm just watching what's happened since we've tagged those icebergs in ES, that we've had a good retrace back already, and we've got that delta there at 456,950. What I believe. Not what I recommend, but what I believe and what I do personally is I try and look across the market. So I'm looking across at different symbols that can drive things. I'm looking at different places that these bigger people, being the giant banks, hedge funds, whoever, might be using in terms of putting their money into to turn a profit to derive from high to low or low to high. And so, as part of this giant move up, which has been propping up ES, they could have taken giant trades in XLF at the lows, and just at some point they'll be taking their profits. That is likely to have happened. So it's not only options plays and zero DTs, 0 days to expiry, that might be useful, and also longer term options positions, and also the futures market. All of these markets are interrelated. That is why there is such arbitrage and sort of correlation or confluence between the markets. One of the other things that I do as well, and maybe it's a use for people. Let me just get NQ back so we can see this. So this time you can see this liquidity is acting as resistance. So this is my point. Sometimes it will work incredibly well. Sometimes it won't work. You just have to accept that. And that provided you have a plan about how you use it, and provided you take a stop and you get your multiple R's when you are right, then it becomes very, very useful to you. Okay. I am just watching for a second, so let's just. Yeah, so anyway, what I was saying with some of these add-ons. So the MBO, we've seen time and again, day after day, how these icebergs can be useful, especially the sell resting icebergs, which I much prefer over the buy resting icebergs. The sell resting icebergs are the ones above, the buy resting icebergs are the green ones below. They're information, the ones below, but I don't treat them as targets in the same sense. Okay. The other add-on that we've been looking at is the Trader Map Pro, and the reason why the filtered is so useful is well, you've seen it. It provides clarity on what might be magnetic targets or strong support or resistance. Okay, so it guides you on where the real liquidity might be, if I paraphrase that. Okay. The other thing that we occasionally talk about, the other add-on that we talk about, And remember, I'm not trying to sell anything. I'm trying to explain how they might be used. The market pulse, right? If there's one way you want to see, let's just have a look now. Right, if you just do the, it's not going to behave for me. It's very annoying. Sometimes maybe it's just a little bit late in the day, and maybe I have to do this when I start. Sometimes it's failed to connect. Okay, let's read that one. Right. Anyway, it doesn't have to work right the second. I've got the beta version because we're testing new versions in the beta group every few days. But what I wanted to say was that there's two volume pressure algorithms in the market pulse. Meanwhile, the NQ has a nice little retrace, and I think it's locked on me. This is annoying if that has locked, because that means we've lost part of our screen. Ah, I found the box. Okay, that's good. Right, now I have control over it again. Okay. I found the error there. It was an error on liquidation pressure, which doesn't apply, and it doesn't apply because it doesn't apply to futures. There are two volume pressure add-ons, right? There's a volume pressure and a volume pressure imbalance, and we've been looking at the volume pressure imbalance recently. Another way of using the volume pressure is as an audible. What I mean by that, feel free to go and take a trial of the beta, which I don't think costs you anything. I'm sure Dan could correct me in the room if I'm wrong about that, but I don't think the beta does. And just using, instead of having it as an oscillator or just as a meter, that would pop up here, and I think we can actually start that one. So let's just start it. No, it's not going to start for us. It's very annoying. You can have that and ignore the pop-up that comes with it and the meter that appears in the subchannel and just listen to it. So you can have two different sounds, one for the volume pressure in ES and one for the volume pressure in NQ. There have been a few products out there in the future space that have done this. There's an original product by a guy called Graham called Price Squawk. There's Tick Strike by the Financial Juice Group, and then there's the Market Pulse algorithms that the Bookmap have been developing and continuing to develop. Right? It is certainly interesting, and it is something that I do. I've got a license. I've had a license. It's one of my lifetime licenses that I do have for Tick Strike. So I do listen and do a direct comparison between what's happening in ES and NQ. But that is a very good use of the market pulse algo if you don't want to stare at the little pop-ups or oscillators. And I'm not a great fan of just watching oscillators because oscillators will reach their extremes as price reach their extremes, but sometimes it's not in advance, sometimes it's lagging, and I'd rather watch price and value. Anyway, that was just my thought on the market pulse. So that's just one way you might want to use it, just listening to the sound of the market. And why that might actually be helpful is that then you don't have to stare at both ES and NQ at the exact same time. So you might have your eyes trained on NQ right this second as it breaks through this liquidity, and your eyes might not be on ES, right? But if you're listening to both of them at the same time and the sounds are different, then you're going to be aware, because it's you're using two of your senses, you're using your eyes and your ears. You'll be aware of what's happening across both of those markets. So sometimes in ETH, one will be a clear leader. Again, you cannot predict the future, and you do not know going into a session which one is going to be the leader. But sometimes it does become obvious which market is leading the other one. All right. Of late, in the European Open session, I always watch the DAX, the Eurex, the stocks, and the FTSE. And a few months ago, because markets do change all the time, you'd have stronger correlation between the DAX and NQ. But these days, NQ sort of does its own thing and sort of leads the DAX half the time. So that even though it's very important to me to be able to see what DAX is doing on a minute by minute basis, I don't care what the DAX is doing on a second by second basis. So again, that gives me a reason why I don't have to subscribe to a premium package for TradingView. A 1 minute chart in DAX is perfectly fine for what I need it for by way of correlations at the London Open and the couple of hours thereafter. Right, so yeah, going back to this ES chart and using this MBO. So we had a potential trade there, clash into liquidity, targeting this. We were aware that these two icebergs could have been distribution points, in other words, sellers advertising that they were providing liquidity because they wanted to sell more or absorb more buyers there to take it back down to there. So, and you've also got this whole bell curve range thing that I was talking about. So that if you were taking it there, you were depending on the size of your stop, maybe it's the time for the pen again. So say you got into this region here. So you got in, say at 4,569.75, right? And the middle of this range, because it's a 4-point range or 4 and a bit points now, is about 2¼ points, so 2.25, right? Because you're in a range, if you're looking to get that 2R that we're talking about, and say that's 1R there, again, this is something that maybe you should investigate yourself, but there is a lot of benefit in scaling at the mid of that range. So taking your 1R as your first scale and still targeting your 2R and maybe much more if we are going to continue down. Right, but it's one thing I do encourage people to investigate, which is trading within these ranges. I do not very often take breakout trades. Sometimes I'm seeing things in the way that the auction is happening. That's the immediate auction. That suggests to me that there will be a strong continuation. So I'm taking a semi-breakout trade, which is basically close to the edge of the range. But I prefer not to do that. Okay, so yeah, so you'd be in there and you'd be really, that would be your main first target, but scaling out halfway is not a bad idea either. Okay, just double checking that we haven't. Hello, Ellie, I didn't actually say hello to you before in YouTube, so hello. Yeah, so effectively, maybe one scale there, maybe another scale there, and then holding some, depending on what your size of your trade was, to see what happens if we can break this previous low here at 4565. And then, where's my arrow? You go back to your TPO chart and you have a look what might be below that. So you've got, where's my pen? You've got yesterday's most heavily traded price, the volume point of control down there, and you've also got this wider range. I'm not going to try and merge all those profiles now, but you've got that wide range that you can know that you're going from the top end to the bottom end on a higher time frame basis. So there are other things that you could hold for. One of the things that I have said several times as well is that we might get or I might be trying to help people get good or better or very, very good at doing some of this really, really small auction stuff, but that can help you getting in and then holding for longer swing plays. It's a skill being able to read a micro auction, but it's the skill that goes well hand in hand with a bigger auction that might be being played out. I mean, you'll see that when I talk about the daily chart and then I talk about this TPO, I'm not talking about a 2 or 3 tick auction inside ES. I'm talking about the bigger picture. But then when we're looking at these little moves here, I'm looking at this small auction, this distribution bell curve that you've got over here, which is a much smaller auction. But it's all fractal, and we're talking about these auctions all the time. And then we're talking about supply and demand setups that I talked about a couple of months ago as well. Okay, let's get NQ back up there. again, so yeah, we've got this liquidity up here. Again, that would have worked. That could have been, that could have been your proverbial target and resistance. So sometimes it works, sometimes it doesn't. But it does provide clear help from what I've seen, and it does qualify as market generated information to the extent that I believe market generated information exists and is useful to people. And remember, when you're looking at something as resistance, it's normally the first touch. If it goes right back there, the second touch, even though double tops or can be considered a category B of that supply and demand, we're aware that if it approaches that liquidity again, it can smash right through it. And it did do that in NQ on that reapproach or the return to the liquidity at 15,936.50. And what do we do again with this particular picture? We zoom in and out. So why do we zoom in and out? We gave a good example earlier because otherwise we might miss something that has just formed in the bigger picture for some really, really useful liquidity that they're setting up. And sometimes that bigger picture is not going to be obvious until you have zoomed in and out quite a bit to get that better picture. It's a bit like the old Photoshop where you're trying to get clarity of your image to get what you want to see. And then if we're patient enough in NQ, you get some of this great action. So you've had a beautiful vertical slip here. So we get the pen out again. Look how vertical that is, right? That is really hard to see in quite a lot of platforms. Remember, a lot of the people that you might be trading against are going to be looking at 15-minute charts, 5-minute charts, 3-minute charts. They'll never have seen that. They will never ever see that vertical slip. And so they'll never be able to back test the type of information that can provide in the price action. Whereas if you've got that in Bookmap and it's that clear, depending on how much you want to cloud it with bubbles, it can provide a lot of information. Again, one of the targets would have been a reclaim of all or some of that, and there you go. That is a good enough reclaim of this vertical action there, right? And that's one of the reasons why I talk about those vertical slips in Bookmap, because it's easier to see in Bookmap than it is in a lot of the other platforms. One of the things that we have to face up to is that an awful lot of the time things are not going to be clear, And what do we do then? We do absolutely nothing. Why do we do nothing? Because we get these times when things are really, really clear. So what was clear here? So if we pause this now, I think that's paused it. We've got this vertical slip up, and then if we crush this, you've got a bit of resistance there. And we're ignoring the price action beforehand, which would have provided us more clarity, but we're just doing this as quickly as we can. And we have a strong down move that's been going on since the overnight high was formed. And we're trying to reclaim this as our first target. And if we also zoom out, this liquidity here at 15,915 has been here for hours and hours since 3:30ish, really since half an hour after the London Open. So you've got other things. And again, it doesn't matter if it doesn't go all the way down there. It's a target. Will targets always be hit? No, they won't. A lot of the time you'll never get anywhere near your ambitious targets. But provided you've made multiple R's on your trade, don't be greedy. Just be grateful, move on. Reset your brain. Focus on this. This is a performance art. One thing I was watching, I'm always watching stuff on YouTube. I was watching a video by Randy Howell. I'm not recommending all of his stuff or anything like that. I'm not recommending you buy his book or anything either. Again, I don't sell anything from anybody. I was watching his video that was done overnight last night, and it's quite a good one. And he just talks about being the best loser or the best way to take losses, and then resetting your mind after you've taken that loss. And that's why that video is actually really quite good. It's about 13 minutes long. And I think he's got lots of videos that are completely free on YouTube. As I keep saying, that one of the things that we all need to do is constantly educate ourselves, and education partly resets ourselves, because education isn't all about these YouTube videos about these magic indicators that have a 100% win rate or 150% win rate, because it's all bullshit. But some of them are really, they are practical psychology advice as well, not just the mumbo jumbo. I mean, the ones that I struggle with on that front are just the ones that tell you that you can achieve anything through meditation. Some of us are not the best at meditation, but things like practical breathing exercises or practical ways to reset your heart rate and things like that, those can be quite useful to us. Okay, I think I'm coming up to the end of the hour. So anyway, I hope that some of the action, I think I've crossed it again. I hope some of the action has been interesting to you. I hope some of the commentary has as well. And thank you very much for coming along. Don't think we've had a tremendous number of people on YouTube today, but anyway, have a great weekend, or have a great trading session tonight, or the RTH session is tonight for me because it's quite late in Perth. But take care, everyone. I will hang up now.